Welcome back to the Boardroom TV. This is where strategy is built, capital is deployed, and futures are secured. I'm your host, Talontic Nagaza. We're not just entering a new year, we're entering a new era, an era defined by execution, not excuses. And let this be the decree from this desk. The Boardroom TV is no longer just a show, it is the command center for the next generation of leadership. We are scaling dominance. We are taking over the broadcasting space, redefining podcast intelligence, and setting the new standard for investment reporting. With an elite mentorship initiative already in motion and major international collaborations locked in for the year, we are not here to participate, we are here to own the conversation. And ownership starts with sovereignty, especially over capital. That's why today's session is critical. We are moving beyond hype and headlines to structural truth. We're dissecting the ultimate strategic reserve asset for a fragile financial world. It is my privilege to welcome a pioneer who operates at this exact intersection of architecture and action. He's the founder of SimplBitcoin, South Africa's first Bitcoin-only regulated financial services firm, and the author of the essential new book, The Strategic Reserve: Bitcoin is a store of wealth and treasury asset. A man who understands the true wealth isn't just held, it's engineered. James Cole, welcome to the Boardroom.
Thanks, Clark. It's good to be with you today.
Yes, thank you so much for being here. Just an introduction, say, of your business and your work in this Bitcoin space.
Yeah, cool. Thanks for that. I think it's such an exciting time to be in Bitcoin and to understand what's going on because the world is starting to pay attention. And my passion has been helping people to understand and comprehend this since about 2016, 2017, and really help people to buy Bitcoin and hold it themselves. You mentioned sovereignty in your introduction, and that's the power to own something. And Bitcoin is one of the few assets you can actually own. Nobody can take it from you without your permission. You have to surrender it. And so that's quite a unique advantage, especially in countries like ours with corruption everywhere and challenges. This is an asset you can actually own. So my goal is to help people to buy and hold Bitcoin for the long term. SimplBitcoin is a Bitcoin-only brokerage and custody business built for South Africans who want to own their Bitcoin properly. So we help you to buy it through compliant named accounts and then move it into self-custody with the correct level of security for your situation. So I've got guys who have a wallet on their phone perhaps, who don't want to spend a fortune on a hardware wallet. And then I've got options where we set up hardware wallets for clients, and then even an institutional grade multi-signature vault that delivers, the Fort Knox standard of Bitcoin security, where my clients all hold their keys. So we don't hold anybody's Bitcoin. Our goal is to really empower individuals to be self-sovereign. We guide the setup and the processes and navigate the risk, especially for companies and institutions in South Africa. And as you've mentioned, last year I wrote my book, The Strategic Reserve, and the focus really is a practical guide for safeguarding capital. And I think that's where we met at the UJ Blockchain Consortium conference, talking about Bitcoin as money for the future.
Yeah, definitely. No, congratulations on the book, James. Your book starts not with Bitcoin, but with a grocery basket in Plettenberg Bay. You call inflation the quiet erosion of value. For our audience who thinks of reserve as central bank stuff, why start with such a personal, mundane example?
Well, I think this is the outsized opportunity that Bitcoin does deliver. A lot of the discussion around Bitcoin is top down. It's all, what is the Reserve Bank doing? What is the central bank doing? Are the actual banks engaging with this technology yet? And the answers there are starting to change. They're starting to say, yes, they are engaging, they're researching, they're looking at what to do with it. But the bottom-up revolution in Bitcoin is probably the more important one, because what we see is anybody can partake, can be involved in Bitcoin. It's a permissionless environment, so you don't have to wait for the big banks to buy some. You can buy some and put it away. And that's really why we start with looking at inflation. Inflation hurts the man on the street. It doesn't hurt the wealthy. And I think that's the thing that people don't really understand. When you're trying to get policymakers to understand the real impact of inflation, but they don't do their grocery shopping themselves. And so they've got this kind of detached outlook at what inflation does. Yeah, and then, working with or studying the work of guys like Safety in the Mouse, you see that when a government issues new currency, and that currency, that new money in the system goes in first to the stock market. And so those who have stocks and shares and assets, property as an example, those prices go up, which means your wealth grows. But if you're saving in rands or in hard cash, you end up getting poorer because the purchasing power of your rands disintegrates. And so when we see inflation like at Zimbabwe or Venezuela, which is very topical right now, when we see that inflation rapidly happening, we're actually just seeing it expedited. The gradual slow trudge of inflation on our own currency, we don't often feel as painfully, although we're starting to feel it now when you start going to the shops these days. So yeah, it's the bottom up revolution that we also need to see and get people thinking about, because it's really a once in a lifetime opportunity to take advantage of Bitcoin, or I believe it is, as a savings tool into the near future. And obviously we need to research this and understand it. Don't take my word for it.
Yeah, just for the layman in the street, James, just outline the history of Bitcoin and how it has acquired its value up to this point.
Yeah, great. So when I did Economics 101, I was taught that the price of a good, the price of something, is set by the supply and the demand for that something. And of course, if there's no demand, there's going to be no price. The price drops through the floor. Yeah. If there's a lot of demand and a lot of goods, then the price kind of stays the same, because there's a lot of supply. We can just create more. And then if there's a lot of demand and no supply, the price just goes up. And so that's how we look at pricing and the value of something, or the pricing of something. And so Bitcoin's price started at zero. It wasn't worth anything until somebody started buying pizza. Mm-hmm. And 10,000 Bitcoin for 2 pizzas was quite a lot of money back then, but it was actually just the $20 that the pizza was worth. But over time, the Bitcoin has moved into a marketplace where people are able to buy and sell it and trade to get Bitcoin. And that's what we see on the exchanges with the crypto asset exchanges, etc. A forum for people to buy and sell. So that's where it gets a price from, is from the market. The market right now doesn't consider it as valuable as it did 6 months ago. So Bitcoin has come down by 30% in price. But underlying Bitcoin is digital scarcity, and that's really the most important factor. It's an item that can't be copied or cloned. And if I always love, referencing, going back to something we understand. So if you think of like an MP3 file, we actually used to ship songs on CDs, and a CD, you could buy it for 100 Rand and sell it next week for 75 Rand because it was used, but it was still an original copy of the music. And then MP3s came and you could copy it and just give it to somebody. And there was no way to tell if the MP3 file that I received from you was original or real, or if it was just a copy. In fact, it was real, but it was a copy. And so the value of CDs disappeared, and MP3s just destroyed the whole music industry because scarcity was lost. And I think that's really the biggest difference. So Bitcoin and most crypto assets can be printed more. So you can print more altcoins, most of them, and you can have a lot more than your 21 million, where Bitcoin's got a hard cap of 21 million units, and so you create scarcity. And so Bitcoin enforces scarcity as its primary function of the code. And so you've got this scarce good that's digital. So that's the first and most important part, is that when I try to spend Bitcoin, if I've already spent the Bitcoin, I no longer have a right to do it. And I can't engage and spend the Bitcoin. But if I haven't spent it yet, then it's mine, and I can decide what to do with it. And Bitcoin self-enforces these rules to ensure that it's impossible to copy and clone it, and then pretend you still have the legitimate item.
And you were just alluding to those conflict situations like Venezuela. You're telling me, like, with this asset, you are protected because in such volatile times, like the situation like in Venezuela, because you would assume the local currency will definitely take a hit with the uncertainty, but with Bitcoin, it's a little bit of a different ball game, yeah.
Well, yeah, I think there's two components to that. Guys who've been stuck in places like Russia, when the Russian war started, those who defected from Russia weren't able to leave with all of their assets. Those running away out of Ukraine, the guys couldn't go with all their wealth, except those who had Bitcoin, because those who had Bitcoin could remember 24 words and cross an international border without anybody knowing you were taking all your wealth with you. And so, so in a tumultuous time, or in a difficult time, the ability to carry your wealth with you easily is remarkable. And it doesn't matter how much wealth you have. If you've got a small house and you're able to sell the house or bond the house or get a loan on Bitcoin, buy Bitcoin, and move out the country when you need to flee, you can still carry your wealth with you. Or if you're a man on the street and you've only got, say, 10,000 Rand, you want to cross the border with that 10,000 Rand. You don't want to leave 5 of it behind. And so, this is the reality of it. Because it doesn't care who you are, you can engage with Bitcoin if you've got 100 Rand or if you've got 100 billion Rand. And I think that's quite an interesting way to look at it. The other side, of course, is that because it's permissionless, your enemy can also use it. So there's also that reality. And so the baddies are also using Bitcoin sometimes to protect their wealth. And we've seen that with this, the Venezuelan president who was arrested, has a lot of his net worth stored in Bitcoin. And now the question is, will he be able to get it or not, now that he's in US confinement? So we'll see how things go with that. But yeah, the Bitcoin, because it's an internationally accepted asset, it does allow you to take your wealth with you, and to store it in a way where nobody can steal it from you.
Yeah. You lay out a powerful case for what you call the reserve illusion, that traditional safeguards like cash and bonds no longer hold. In simple terms, why has the playbook for preserving wealth broken down?
Well, it's a very interesting study and quite hard to get into in a short time. But I think the main thing that we're seeing internationally is, in 2008 we had this financial crisis, and the banks were defaulting, and some banks closed, and some banks were bailed out. And since that, we've had an unprecedented amount of new money being issued, being created. So they said more than 40% of all the money that exists in today's world was created since then. So we've got, in fact, even shorter time frame. But we've gotten a huge amount of devaluation, or the purchasing power of all currency dwindling dramatically. And the lack of trust that creates in the government currencies causes a massive problem. So, as an example, twice in recent history, the bond auction at the United States government, where they say we're going to create this much money to do cool things, and they publish it to the market, have been undersold, undersubscribed. That means nobody wants to buy American debt. So there are these problems in the system, the way the system relies on those bonds to keep working. And so Bitcoin really is a hedge against the collapse of that system. Whether or not that system collapses, or it gets propped up, or it continues to go in some way or form in the future, remains to be seen. But Bitcoin itself, now 17 years old, has proved that it is actually a viable and sustainable currency, in my opinion. So it is a bit of a hedge against kind of the existing system and the weaknesses that are really being exposed quite dramatically in existing systems.
Yeah. And for the CEOs and CFOs listening, you state the tools designed to protect capital have become transmission mechanisms for systemic risk. That's a profound accusation. Can you unpack what that means for a corporate treasury today?
Well, yeah, I think it's a similar discussion that at the top, or as underlying of the entire financial services industry and the financial monetary system is trust in the government to do what it's going to do, the GDP to keep growing at the right percentage rate, and the systems and processes to just keep operating exactly as they have done before, including bailouts, including Reserve Bank issuing new currency, and including everybody just trusting that this is going to keep working. And I think that's what we've seen happen really badly. I mean, we hope we'd never see another Zimbabwe story again. But just next door in Zim, we've seen that terrible play of the trust degrading rapidly, and the money losing its purchasing power and hyperinflation, etc. So those are the outcomes of the system continuing as it is when the trust breaks down. And I think that's exactly what we're trying to protect against by holding some of this asset, which isn't governed. And I think that's really the strongest point of this argument, is it's not governed or controlled by any one person or any team or any company. Bitcoin operates as it operates and is maintained or looked after by an international group of people that have no say over how it goes. All they do is keep running it and keep letting it do what it does according to its computer programming code. So you're trusting code and math and energy, not a government or a person or a reserve bank to take the best interest of the users into account. And so that's why it's a great hedge as an asset against the endemic systems.
Yeah. And you list new requirements for a credible reserve asset. Resist debasement, avoid correlation, be verifiable. Nothing in traditional finance goes well. Is this a temporary market condition or a permanent structural shift?
So the requirements of a reserve asset, I think, are generally defined. So in other words, these are what we would normally look for to consider something as a reserve asset and not just a high risk investment, because that's obviously, as a reserve company or looking at your treasury reserves, you're not trying to make investments with this asset. You're trying to preserve your purchasing power over time. And so those really are the characteristics that will help you to ensure that this is an asset worth allocating to. And because, as I said, of the breakdown in trust, we are seeing internationally, as that same example, the US bond auction not being fully subscribed. That was a massive problem if you're trying to buy and sell into these bonds. But also what you want to look at is, does Bitcoin fulfill the requirements of money? And that's where Bitcoin really is shining right now. It's the first kind of frontal range of attack is, can it be used as money? And definitely it is starting to be used very well as money and starting to meet the requirements of money better than any other asset. And so, it's a bit of a journey into learning what money is and how it works before you can get to what is a strategic reserve asset and how that works. But it's an interesting question to look at. Is it broadly defined? I think the ideas of what a reserve is really must bring benefit and security to the holder.
James, you call Bitcoin the first money of truth. It replaces trust me with verify it yourself. How does this fundamental shift from trust in institutions to trust in code change the game for capital preservation?
Well, I mean, a great question, and I think it looks at it from two different perspectives. The first is that you don't have to be well connected and understand intimately the workings of any organization or government in order to just buy and hold some of the Bitcoin, because the system is transparent. You can actually review the code, understand what's happening, look at the history, and it does exactly what it was programmed to do on average every 10 minutes. So, you've got this system where your trust is not in somebody giving you the correct report, telling you the right numbers, or maintaining their trajectory. The trust is not required because you can actually fill it with knowledge. And so that's why we call it a trustless environment. Before you accept Bitcoin, you wait for 2,000 nodes across the globe to confirm that that person was able to send you the Bitcoin. And so you don't have to trust somebody that the paper he's giving you is worth something. The Bitcoin in your wallet is yours, and when it's received and confirmed twice, it's yours, and you can actually move it, and they can't take it back. And so there's a whole lot of layers of trust that existing systems work on that you're able to break down. And so that's why it's the money of truth. Bitcoin is a record of truth from creation. Every 10 minutes on, the history of that Bitcoin is completely recorded. And we're able to see it move from place to place and then to me. And the fact that you had it and I've got it, you can't take it back. All of those small steps just remove the need for trusting the system and give us the ability to just know that it's accurate. So knowledge replaces trust.
Yeah, and the digital gold narrative is common, but you go deeper, highlighting strategic superiority in verifiability, portability, and finality. For an institution holding physical gold, James, what is the most compelling operational argument to consider Bitcoin?
Well, I think it's actually quite interesting that institutions largely don't hold physical gold. Most institutions will be holding a ticker, an exchange traded gold of some sort. And so that relies a lot on the custodians to be reporting accurately. I don't know if you saw the gold, Fort Knox was visited by Musk and Trump. Nobody really reported on what they found there. It's an interesting one. So then just
I see now
in China,
institutions are actually sending gold to Singapore, yeah?
Well, last week, yes. So the international buyers of gold, physical gold, China, Singapore, these nations are hoarding gold at the moment. So that obviously has driven the price up. But we've also seen last week in Japan, one of the Far East countries, a company that was selling physical gold was shipping a metal wrapped in gold, so a plated gold product to their clients. And they've been doing that for a decade. So there's a huge stockpile of fake gold. And because it's the same weight as gold, nobody knew that this was not real gold until somebody scratched it to show that it was real and found it was fake. So there's this trust in gold, whether it's physical gold or stock market gold, that is a complexity that has to be overcome. Bitcoin does that better because we don't need to trust it. We know if the Bitcoin moves, it's Bitcoin, it's real Bitcoin, and you can't fake it. So that's the one component. And then the other side is custody. I can actually self-custody my gold. But then when I go to the airport with my gold, I'm not allowed flying with more than 10,000 rands worth of gold, which means I scrape a few leaves off. Even if they let me get on the plane, if it's under a time of stress, they most likely will confiscate the gold from me. So, there's a problem with transporting gold and then moving gold, of course. If you are actually at an institutional level holding physical gold, moving that physical gold is incredibly expensive. Where I can transfer, if I had it, 1 billion rands worth of Bitcoin for 37 US cents at the moment. So it costs me almost nothing to actually transfer Bitcoin. But to transfer the gold is very expensive. Obviously, both of those have their pros and cons. So Bitcoin custody is your most important thing to get right. So Bitcoin is meeting as I said earlier, the requirements of money, of currency, even better than gold has in the past.
And how are we doing on that front? From South Africa to the rest of Africa, how are we doing on that front in terms of gold production? Because we used to be a leader once upon a time in gold mining. How are we doing on that space? And also in terms of strategic reserves, what is the conversation? Have you followed this up?
Well, no. So gold is not my area of specialty. I've researched it to understand it. And I have noted that internationally gold production is up against South Africa specifically. But we still have great deposits. I'm just not sure how well they're being exploited. Yeah, so I'm not really sure on that front, Ntahlo, but I do see demand for gold just keeps growing. We've also seen the supply of gold, or potential gold in the ground, rise astronomically on the continent. So we have huge gold deposits that are currently not being taken advantage of, and so that also adds to the supply of the asset in the market, which should affect the price, yeah, depending on the cost of actually getting it out the ground. So yeah, gold is still a good asset. It's a good hard asset, and of course it's had a good run recently, and actually this speaks into the Bitcoin kind of thesis as well. We see the trust internationally between China and America becoming a problem, and we see China absolutely hoarding gold, because gold is the safest, historical and most established strategic reserve, and so countries in fear will collect as much as they can. So it's still a really good asset, but very difficult for the man on the street to buy and hold in any value that actually makes sense.
Yeah, let's tackle two major critiques head on first. First, volatility, and you contextualize also this as price discovery, not structural weakness. How should a long-term strategic holder think about volatility versus the predictability of Bitcoin supply?
Well, I think you're spot on. The volatility is almost the main reason people dismiss Bitcoin. It's also the main reason it's offered outsized returns for those who do hold it responsibly over time. I think the key is really to treat it as a risk management problem rather than a moral problem. Bitcoin is volatile because it's still becoming money. Although it works very well as money, people don't yet globally accept it as money. And the market's still deciding what it's worth. It is globally tradable 24/7 and responds very quickly to things like new liquidity or new money entering the market, and then leverage and the leverage flows we've seen lately, especially around taking longs and shorts on Bitcoin's price, and the markets, the exchanges just closing those and bringing down into a crash or into a sudden peak in price. And then the news, of course, still affects this price. But the supply is fixed, it's inelastic. What we are seeing is the supply on exchanges being very small. And so that's why the price responds very dramatically to those changes in liquidity. In other words, in money being available to buy Bitcoin, or Bitcoin being sold to the market. And so at the moment, the price just moves when the demand changes. It actually works both ways. If you want the upside, then you've got to kind of accept that the path is not smooth. It doesn't just go up. But if we look at the trends, it goes up, down, and averages up over a long period of time. But it also can crash by 60-70% over a couple of days, which we've seen a number of times in the past.
Like when you spoke about Malawi's 40% overnight devaluation.
Yeah, and I actually saw somebody referring to that for the first time from the West, and he said, Malawi devalued the currency by 44% overnight, and what a nightmare for the Malawian people, because it's an impoverished nation. The people hold their money in cash under the mattress. And when they went to the shop the next day, the shop owner was busy changing the prices because everything had got 40%, 44% more expensive. And that's just to secure an IMF loan, or to actually let the government get more liquidity. So as Africans, we're not scared, or we're not. We've seen inflation, hyperinflation before. We've seen volatility in our own currency before, but the Western framework around volatility is they're not used to it, especially in something that we consider a store of wealth. So yes, it is a very important thing to understand, but also it's why I treat Bitcoin as a 5-year investment for my long-term clients, because nobody who's bought Bitcoin and sold it in 5 years' time has ever lost capital. But guys who are trading for a month or a week or a year or even 2 or 3 years sometimes are underwater when they try sell. And so it really becomes a good asset for long-term savings rather than short-term or intermediate saving strategies.
You also write ownership means nothing without access. For institutions, the leap from understanding Bitcoin to holding it securely is huge. Why is multi-signature custody non-negotiable, and why should institutions be wary of convenient alternatives like MPC?
Well, I think the one thing to consider is that Bitcoin isn't centrally issued. There is no reserve bank to print some new Bitcoin and give you new Bitcoin if you lose your Bitcoin. You have no claim on other Bitcoin, and so holding your Bitcoin becomes the most important part of ownership of Bitcoin. A lot of really good companies are issuing Bitcoin products, and they're holding the Bitcoin very soundly, and the structure is wise. But it's the one asset you can actually own yourself and protect yourself. And so, yeah, it becomes quite important to review what levels of trust you put in when you're trying to engage with Bitcoin. And that's one of the problems with MPC technology, is that there's a trusted individual party that holds the code that helps you to recover your Bitcoin if you for any chance lose it. And so the complexity of that recovery is almost no complexity if everybody's still up and running. But if they're not up and running, a complete whitewash. You can't get back your Bitcoin. And so, these are the small things that you've got to take into account. What I do is I actually set up a multi-signature vault, and there we take a hardware wallet that holds Bitcoin, something like the Ledger Nano S Plus, or even better, the Trezor. I like the Trezor Bitcoin only device. And you take a hardware wallet, you combine three of them together into a secure multi-signature vault. And then you need two of the three hardware wallets in order to spend the Bitcoin. And that's called a multi-signature vault. And really what that does is it delivers institutional grade custody that's still bearer asset. And most importantly, it's native to Bitcoin. And so you don't rely on the third key holder to be solvent or honest. Because you have two keys and you have the backup and you have the mapping, you can actually go into any country in the world, take it with you, access your Bitcoin, as long as you have two of the three keys. And so it becomes much lower risk, especially when you're looking at legacy planning. So a lot of my clients are looking at, look, I've got Bitcoin. How do I make sure my grandkids can benefit from it?
Yeah,
And we build
that's
the
what
right
I
structure.
was leading up to when you say
Yeah.
if you die without a plan, your Bitcoin dies with you. For family offices and founders, how do you translate cryptographic keys into a durable multi-generational asset plan? Just in a few seconds. Yeah.
Yeah, brilliant. So I think that's actually, the most important part of this discussion of a strategic reserve is it's worth nothing if you can't recover it. And so that's why a 2 or 3 multi-signature vault, this vault that we speak of, which is supported by Simple, or you can do it completely on your own, and backed up in the correct methodologies. We've got steel plates to back up your private key. So you take a steel plate, you record your private key, you store those separately to your devices, and you implement these simple procedures accurately and carefully. You can ensure that your Bitcoin is not lost. And that's really the most important thing.
Yes, sir. To close it off, James, your work in this space. I mean, what would you say? What would it be if you could leave our audience with one mental model to replace the noise and fear around Bitcoin?
Cool. I think it's two things. It's first learn Bitcoin and then get started. Start saving in Bitcoin. And you can actually do that with us at Simple. Our website is www.simplb.com and then or .co.za/onboarding, and book a call and let's talk about how we can get you saving in Bitcoin. That's the most important thing. First, understand it, learn about it, and then get saving in it.
Thank you so much, sir. We shall talk further. Thank you for the
Great to
time.
be with you today. All the best.